Welcome to the Insurance Nerds News Roundtable. We're excited to have Ryan Hanley with us today. Welcome, Ryan.
It's great to be here.
Absolutely.
What's up, man?
Thanks as always for running the show and getting us all together. Yeah.
Awesome. It's we have a lot to talk about. I think most noteworthy is that this is take two.
Yeah.
Yes.
Given that the guy in the left corner here bundled the recording, and so we're doing this over again. So on the first go around, Ryan gave a pretty good explanation of Bull Penguin. We wanted to follow up with him, see how it's going, whether he's wore the penguin suit, So now that you don't have the red eye hangover, Ryan, give us an update. What's going on with Bull Penguin?
So, the funny part for those listening at home is that like these guys were upset or worried or whatever when we lost the recording. I had jet lag hangover big time and was barely putting sentences together. So even though they both were very nice enough to say that they did a good job, I'd like to hope that today will be a little more articulate. My brain is at least firing on most of its cylinders today.
I thought you were brilliant, but it could have been one of those things where you were just like putting words together that didn't make any sense, and I was just like, wait a minute, this is like way over my head. This guy's a genius. I just don't understand.
He explained everything about insurance, everything about marketing, the Bills' secret plan to tank for next season. He had it all in the first episode, so hopefully, we'll get to do that again. So.
Well, I'll give you guys the elevator pitch on Bull Penguin. We are making small commercial profitable for agents, brokers, and carriers by reducing friction in both the client acquisition and underwriting process. What that looks like specifically is if you take the human agent and they put them at the center of the transaction, we are a firm believer in the human agent. Now, that takes a couple different forms, everything from a Main Street agent to an agent inside a top 100 brokerage to an agent inside a carrier-owned call center. And regardless of where that human agent is, we're taking the client acquisition process and we're removing all the garbage in between when a prospect shows interest in commercial insurance and when they actually talk to the human. That takes the form of a 35-person call center. We have a dynamic and I'll say machine learning driven service. We're not at the AI level yet, since I don't believe anyone technically is, but we are constantly learning the questions that we have to ask and dynamically exchanging those questions as people answer them in order to do two things: validate that the information that they've given to us is accurate, and verify that they have intent to buy in that phone call, or at least very close, right? If there's a scale to 1 to 10, we don't want to deliver an opportunity to an agent unless it's a 7 or above, and that's fairly arbitrary, but it gives you an idea, right? It doesn't do you any good to get someone who's just kicking the tires. So as an agent, your life looks like I show up for work, my phone rings, and someone from Bull Penguin's team says, "Hi, I have, Steve, the bakery owner, on the phone. You've let us know that you're interested in bakeries. Here you go." And then now you're talking to Steve. What the transaction looks like from there is every question that our team has answered is piped into your terminal. That's just a web page. That's Bull Penguin terminal. And now you are receiving in real time rates from 6 different carriers back, in which you can bind right there on the spot. So think about it from the standpoint of the customer experience. You made one phone call, you answered one set of questions, and you are then passed to someone who is a licensed agent. No one on our team is licensed on purpose. We're not asking questions. We're not giving pricing. We're not giving coverage recommendations. We're collecting information, verifying intent and information, and then passing that off to a licensed agent. At which point that licensed agent has live bindable quotes that they can do that business, transact that business right in that moment. So the customer isn't making a 45-minute phone call to collect information, then having another half-hour phone call to get all the information that the underwriting team came back and said they needed, and then waiting another 3 days to 3 weeks to actually get a quote back. In one phone call, they are able to get rates, coverage recommendations, and buying that policy. And we do that all, you've probably seen on LinkedIn, I've been writing a ton about connectivity and APIs and how I think that if there is a disruptive force in our industry, it is not any one company, or I think it is the idea of connectivity. And today that looks like, open, REST, whatever you want to say, API technology today. And tomorrow there may be a new technology, but this idea of connectivity, how connected, how can you put your data to work? That's what we're allowing carriers and brokers to do. And, we're already seeing, we just put, we put a large carrier to work. First week of September, we launched our largest project to date. We're running a 300-person call center, internal call center for a carrier. So our system manages every single one of them. And unfortunately, I can't tell you who it is, though. There's only a couple, so you could probably guess it. And we've just in 5 weeks, we've increased their conversion rate from 21.2% to 21.8%. Now you may be saying, Ryan, that's only 0.6% increase in conversion rate. That's over thousands of transactions. So we're talking about real dollars in 5 weeks and seeing an increase. Mm-hmm. And what's going to happen is that's our metric. Our metric for success is not how many leads or opportunities are we passing you. It's, are you converting more business? And conversion to us shows that you are doing that the process is working, right? Yep. So
real dollars.
There's lots more to it. Yeah. But I like to say we are the only whole product solution in the marketplace for small commercial. There's just no one else is doing it full spectrum.
It surprised me that you guys were plugging into a rater in your system. You said other ones that just pipes it out where there's not as much interactivity, but it sounded like personal lines kind of elevated to small business, however you want to look at it. And then that lowest rung of personal lines, you're getting into that somewhat self-binding mode these days. So everything's kind of evolving,
Yeah. So it's interesting. The conversation that I think that it makes sense to have next is around, so why not just allow consumers to go all the way through the process and bind the business themselves, right? That's where everyone's brain goes, is let's just cut out the human being, let them bind their own policies, and boom, we have an efficient market with a higher margin, more efficiency. We can track what's happening in a more efficient way. And unfortunately, there has not been a case study yet that shows, especially in commercial lines, but really across the board, that self-binding and a self-binding customer experience is a more profitable way to transact business. Mm-hmm. You look at lead generators, you look at comparative raters, you look at any of the online self-service tools, including Lemonade, Root, which have incredible business models. They just can't figure out how to be profitable yet. Now, that's not to say that they won't, but it just hasn't been proven yet. I still believe that the customer experience has to touch a human at the right moment, right time, right moment, right agent, all those things, and hopefully just one touch. But there needs to be a human in that process to verify, to build trust, to just make that connection, double check, and then boom, then we move on.
Well, I think you're 100% correct, but I think it's subtly more complicated than that. Mm-hmm. For one thing, if you're a small to mid-sized business, the learning curve to pick up, to become a quasi expert in like, hey, our company is exposed to X, and I need to go get coverage for X, and I need to be able to read the forms, and I need to be able to know if the price that's being charged is in the realm of the market sphere. Hello, it sounds easy, but that's like incredibly difficult. Mm-hmm. I mean, just look at all of the agent friends that we know. Brett, you're going through this now. It takes an entire career to build that expertise to do that. So it's like, a lot of the insurtech companies that are coming in are just like, well, you can just knock the agent out. And it's like, no, you don't understand. They're serving an incredibly vital role. You can't expect a small business owner or a mid-sized business owner to be able to just become an insurance expert and be able to know whether what they're paying is commensurate with a general market rate.
You can't even do it on personal lines. You can't do it on personal lines.
I agree.
Yeah.
I agree, but at least with personal lines, people have slack, right? Like on the weekend, I can do a little bit of research and feel as though I'm an expert. Mm-hmm. Small business owner has no time. It's like Yeah, they can go out and buy and shop and get an insurance policy, but I think they instinctively know they're shooting themselves in the foot. Just pay the 15 or 20% and just have an
You're not
agent.
actually paying the 15 or 20%. So I'm going to push back on what you just said right there, because I think this is one of the largest misconceptions of what happens in the market. You're paying that 15 or 20% regardless. You think Geico doesn't pay the 15 or 20%? They're paying $1.5 billion to do advertising, and they weren't even profitable last year.
You're right.
So it's like, you are always paying. Because the money is going towards agents and brokers does not mean that as a consumer, that 15 or 20% isn't baked in. Truthfully, in some cases, if there isn't a broker or an agent involved, you're actually paying more, because the cost of acquisition for personal lines business is astronomical. So you're talking $100 clicks in some lines of business in some areas of the country. So it is insane to think that, yes, is it super easy to take a lowest common denominator approach? And I'm not saying that's what you're doing, Nick, but to take a lowest common denominator approach and snipe at at brokers and say, oh, we have to pay them 15%. That is, if you're taking that position, you don't understand the industry. And this is why I get into Twitter arguments with these insurtech people. I was getting into one today because someone was telling me that Lemonade is disrupting the industry. And I said, look, I love what Lemonade is doing. I do. I don't like some of the things they say about agents and brokers, and I've come on the record about that. But the way that they're attacking front-end acquisition, I think it's phenomenal. That being said, I only think they have half a business because they're not driving that business to a broker. And their initial policy offering has $100,000 in at-fault liability, which I think is just completely inadequate. It shouldn't even be legal. And that's not their fault. I'm just saying.
And they get paid 25%.
They get paid, off the jump. And they've stopped reporting how much the insurance business is paying the parent company for marketing services and back-end services. Mm-hmm. So I get it. I get that they have to pay their bills. I 100% understand. But they're one that snipes at the broker fees. So this guy's telling me that, they're disrupting the industry. And I'm like, they're disrupting the industry. They have 10 million in DWP. That's like a rounding error to most insurance companies. That doesn't even enter the realm of relevance.
Yeah. Plus, I don't want to tangent too far off, but this whole State Farm thing that they're patting themselves on, they tend to pat themselves on the back for things that are just like, wait a minute, what do you, the State Farm commercial, they're patting themselves on the back. And and my thing with that is that's how they get their marketing, is like they're leaping on that because it's free publicity. They can hammer State Farm, and then they're like they build up the virality of the messaging because everyone's just like PR. And that's what it is. And so someone on Twitter today was just like, well, they're obviously getting themselves ready for either an IPO or an acquisition. And I said, well, either way, that's a problem for them because they won't be able to do this kind of marketing where they leapfrog on top of some message and just say, hey, we're our policies are going to help the gun control problem, when in fact it's like all policies do that.
Yeah, that to me was one of the things when I went, I wrote an article about that, about how I thought that was one of the most disingenuous articles I had ever read in my entire life, because all they did was bring their coverage to standard ISO form, which many carriers cover. Now in some instances, carriers will bake in additional gun coverage to the standard ISO, and they didn't reduce it from standard ISO. They went back to standard ISO and then said, we're taking some big gun stance. Yeah. You didn't take a big gun stance. One, you limited coverage to potentially to third parties who were injured in a gun-related incident, so you're not actually helping people. And two, you went back to standard ISO. So my point is saying, look, I don't want to knock on Lemonade because, one, they have the greatest PR in history and no one can ever debate them. They're absolute geniuses when it comes to that. Two, what they have done for the industry in terms of pushing forward what it means to be client acquisition focused, mobile first. The technology they built is revolutionary and they should be applauded for that. I wish that they hadn't attacked the independent agent market, because they haven't proved that they can beat the independent market yet. So,
but that's part of the message. That's part of the disingenuousness of it is their target market, Ryan, is folks that already dislike insurance.
Yeah.
So they're going for that urban person that is very distrustful of insurance, loves tech, and it's like, hey, look at us. We're not them. We're different. And look at our charity. And look, and don't look at how much we get paid, but look at us. You know?
Yes. Here's this Twitter exchange. So this guy, I said the first part of what he said, and then I came back and I said, look, bro, $10 million in DWP is like, it doesn't even crack relevancy in the carrier space. And he's like, well, that'd be like comparing the level of profit made by Starbucks to your local coffee shop. And I was like, dude, exactly. Nobody is writing big, long form articles about how your local coffee shop is disrupting Starbucks. So like, what are we talking about?
Exactly.
Now I hate myself for spending 10 minutes on this topic on your show.
They're hoping to become Blue Bottle and get bought by Nestle for $1 billion. It's just buying eyeballs, buying a network, getting out there. I bought one just for the experience because my landlord wanted me to have a renter's policy, and it was clean, but you didn't really feel like it was something of substance.
I know a lot of people that have purchased it. I've purchased it for my daughter. I'm fine with it. It's, as Ryan said, I'm more troubled by them trying to get in and bash something that I've tried to build a career touting.
Yeah.
So that's it.
Kind of bastardizing it.
Yeah. In terms of like pushing the envelope and just saying, hey, we as an industry, we can do better. I think we've all said that at one point or another, and we all agree with that. It's just the way that they message it. That's the only problem I have. Ryan, for them, State Farm has what, $65 billion in gross written premium, right?
Close, somewhere around there.
Okay, to get now, I'm surprised someone hasn't said, well, Uber was small at one point and Airbnb was small at one point. The biggest difference, though, is to get that big, you need like such an incredible amount of capital that it's not even worth your while. Like it's ridiculous. Like to build insurance is that one industry where it's not winner take all, because you
can't compare it against Uber because Uber didn't have a competitor. The taxi industry was not a competitor to Uber. Uber was blazing new ground.
Yeah.
We're not blazing new ground. We're talking about mobile first, machine interactions. We're not, it's a different way of doing business. It's not a new way of doing business. Uber was a completely new way of getting a ride. You're talking about different human beings, different vehicles. You just said, we're not using this entire way of doing business. We're going to do a whole, that's not what's happening. They're using standard Accord forms, which is one of the reasons why I think it's great that people buy renter's insurance to them. I have no problem with it either. Like, I don't need it. I would think about it if I was moving to a new city. I would probably use an IA personally, but whatever. They're using standard Accord forms, ISO. It's all good. So like you're getting good coverage as long as you're getting good liability rates. I think it's all good in the hood. It's just I think it's over dramatized the impact.
Yes, completely. Well, I mean, there's a whole group of people that just love the word disruption. To them, it's just like everything should be freaking disrupted. It's like society should be disrupted. Like everything should be like, just take that apple cart, just flip it over, and just then pat yourself on the back and say, I disrupted it.
Yeah. That's a self-aggrandizing, ego-driven argument that there's actually there's no part of insurance that needs to be disrupted. There are many many aspects of insurance that need to be innovated and in some cases drastically innovated. But there is no part of our industry that needs to be disrupted. If you disrupt our industry, are we sure that Michael, Florence, and Harvey get taken care of? Are we sure that the people in those places, if it's disrupted, if it's just bots and claims and drones and all that crap, you know what I mean? And maybe the answer is yes, but the answer might be no. And what I'd say is those towns are going to be rebuilt because insurance was in place in the current industry in the way that it's set up. Completely. So I just think, let's not talk disruption. Let's talk about integration and innovation. And there are places where some players, I think Metro Mile has a chance. I personally think if I were Lemonade, you think about dropping into homeowners insurance and add live agents on the back end of that app, and you can start to increase your retention, reduce your, and maybe get your expense ratio, up your premiums a little closer to what market rate should actually be. And you might actually have a business that's at least close to break even. You know what I mean? They could be a player over time. It's just, you're talking, there is no viral growth in this industry that puts you on the scale of a State Farm or a Progressive or a Travelers or a Hartford. You do not get to that scale in months or years. That's decades it takes to get to that level.
They're chasing a different game, kind of noise in the audience game. And then just in insurance, maybe renters is 1%, 2%. They take over a quarter of that. It's a real small part of the pie.
Yeah.
But yeah, I'm with you. It's just digitization and being a broker who's been in it for 4.5 years, who's trying to build something up. You feel like all the seats are taken. You find something like maybe cannabis or drones or like a newer market, that's where you can grow. But otherwise you're fighting inertia. You're fighting policies that are in place. You're fighting people not wanting to deal with anything. You know, you're not flipping that upside down.
How old are you?
33.
Yeah. So basically people look at you like you don't know shit. They're like,
right.
why
the hairline's helping though. This is
33, you've been in business for 4 years. You don't know anything. I mean, that's the worst part about it is like, if you're working again, you walk up against a nice sized contracting business and they're working with an agent who's been in the business for 25, 30 years. And you're like, what are you going to do different? You know what I mean? Like what you're going to pick up
reading a book to help me out with this stuff.
You got a chatbot I can use?
You know, another thing that the disruptors, what do we get there?
Oh, the wedge. Nice.
That was from your video like a month ago, I think.
Yeah, Ray Schwartz, man. He's a real deal.
One of the most expensive books I bought in a while. I think worth every penny. You know,
I have right there over my shoulder and right next to my clean clothes. Sorry, I have that in the video.
No, you're good.
I have my Ray Schwartz book.
Yeah,
nice.
Right there.
Yeah, mine is down on the bottom of the shelf.
You have to be different.
Yeah.
Brett, I've told you that a few times. Like
very much so.
You pretty much can't show up at someone's door and just say, I can get you better insurance or I can get you a better price. That is not different enough. And I think part of the innovation and creativity you talked about, Ryan, is in that we can improve in product development is how do we make better products? Make better products that people can buy them and consume them in ways that isn't as frictionful.
Yep.
As currently exists. So speaking of friction, I want to respect your time, Ryan.
That's okay.
Have you put on the bull penguin suit yet?
I have not put on the bull penguin suit. Hold on, before we get there, one more point I want to make. So you talked about better products, right? Because this is the shit that I geek out on. So you're the insurance nerds. Right? This is what we're here to talk about.
Let's geek out.
So one of the things I think is most interesting about that is I think today there are two ways that a young agent like yourself can differentiate yourself. You have to have to be world-class sales, and that only comes from tons of reps and reading great books like The Wedge. There's tons of other sales books. I have a good one. Actually, my computer's on it right now, but this is an awesome sales book right here, The Only Sales Guide You'll Ever Need. It's from Anthony Iannarino, and he talks about the 12 commitments that you need to get. 12 commitments. This is high quality. Make this, it's worth, I think I paid like $15 for this. It's worth the $15. It's awesome. So you have to be a good salesperson. Then the two ways you can differentiate yourself are, one, dive deep, know the policies, know what you're writing, know the language. If you can't go verbatim on policy forms, then what are you doing? Like, you're just another policy pusher. Like, don't tell me you're not a commodity, but you don't understand what you're writing. You're selling a contract. Like, understand what the words mean, what the exclusions are. How does one policy differ from another? If you walk in against a Cincinnati policy, you're in big, big trouble. You don't want to know why? Because they can literally do whatever they want. That's the way they operate, especially with agents that do a lot of business with them. Another good example of that is Central. If you have if you walk in and you're like, I'm in Southern California and I want to go crush contractors. And here's what I want to do. And what I need is this one little change made. And it's not a big deal in SoCal. I know you can remove this piece, give me a little bit of price back, and I'm going to go crush you. They'll consider it. I'm not saying they're going to do it, but they'll consider it. So now you can go to market with a firm understanding of what the policy language is and a product that in some cases is actually superior. And if you can articulate that through a good sales process, you will win. If you can't do those things, you're going to struggle today. The market is just way too mature. And the problem is most people don't want to be good at sales. They're like, just give me my chat bot. Just, I can text message you, or, you know what I mean? We're going to do email automation. And it's like, that stuff is cool. Don't get me wrong. I love every aspect of that. But if you don't know the policies, you can't sell, and you don't have a superior product, all you are is a commodity, no matter how many text automated campaigns you have. It does not matter.
I always think you can get to know a person better in an hour in person, over a year, over email, whatever else. And then also good friend, successful guy. I had lunch with him before I got going. He's like, I never bought anything from anybody I didn't meet in person. And he ran a multi-million-dollar food brokerage. It just kind of goes back to the, making a human connection.
And I think the key is you need to have the breadth of opportunities. So when I make fun of or make light of someone who wants to go fully automated, text-based, chatbot, AI, whatever, I push back on that position when that is your value proposition. I don't believe that or your sole value proposition, your sole differentiation, I don't believe can purely be, I'm just more available, right? I think that's part of the value proposition. Yeah. I think it's an important part. But from my perspective, because how a conversation goes today, and you're probably seeing some of this already, right? You get a meeting with somebody, then they text you a question before you get there. You email them a response. Then they call you with a question after you meet them in person. Then you mail them something in the mail that kind of dives deeper, or you email them a video. And now when you look over the course of your conversations, you've had 15 different touch points and 7 different mediums. And so the answer is, it's not just about being in person. It's not just about being, available 24/7. It's about being able to serve that person the way they want to be served and serving them with a product and a methodology that defines you and who you are. That's really what I think the solution is today. And I'm struggling to see it from a different perspective. I'm struggling to see that purely automated is the way to go. Or I've had people say, everything comes back around. People are just going to want to meet face to face. Come on, bro.
I think you're right. Meet them kind of in the medium that they want, communicate how the customer dictates they want to communicate. Yeah, I think that makes a ton of sense to me.
Yeah.
To me, I think it's the sales component completely.
Yeah.
It's how do you get in front of people? And when you do, how do you differentiate yourself? And how can you, Ryan, you brought up Anthony Iannarino, trusted advisor.
Yep.
How do you be that trusted advisor?
Yep.
If you can become a trusted advisor to someone, then it'll be hard for someone, once you're in, it'll be hard for someone to wedge you out because you're giving such good advice, you're giving such good service. To me, Ryan, I think you nailed it. The tech is what else you bring to the table. It's not the whole thing. There's so much more to it than that. And just bringing tech to the table, I don't know, to me, it's just kind of empty. Tech itself is not going to help you ask the right questions. Tech itself is not.
Maybe. Yeah.
It's barbed wire at the top of the fence. It's not the fence.
Yeah. Yeah. So let's, I want to respect everyone's time on this. I don't want to rehash AFC East that we missed in take one.
Hashtag Bills Mafia. Bills Mafia. Worst team in the NFL.
Circle the wagons. Yeah,
circle in the drain.
I think we should, before we leave, we should just circle around, talk about the World Series.
Yeah.
I'll try to get this video up before it starts tomorrow night. Brett lives in LA. I live in the Boston area. Ryan's like in between, leaning more on my side on the geography.
Geographically.
But what side are you leaning on when it comes to baseball? Are you beat
so
LA?
I'm a Yankees fan, but I will say if I were betting on this series, it goes one of 2 ways from my perspective. It's either Red Sox in 5, and probably the one game that LA pulls out is like a squeaker, something weird happens, but the Red Sox basically dominate, or LA in 7. Goes 7, something happened, Red Sox fall apart, and LA pulls off some shock the world. But I think right now the Red Sox are rolling, as much as I hate to admit it. They just seem like a juggernaut to me. Plus 7-game series coming out of LA, that's tough, man.
Now, my dad's a Yankees fan. I feel like this is torture for him, for either one of those teams to get a championship.
No.
Nick and I have a wager going. Usually we record on Saturdays wearing hats. So whoever loses has to wear the other team's hat for one Saturday.
Yeah.
Ah.
There you go. A little mini bet,
Brett, what's your prediction?
I like Hanley's Dodgers. I can see why Vegas is favoring the Sox, though, like 135 to 100. I think they have the slight edge right now, and you never know about the youngsters. And if Kershaw can be regular season Kershaw, I think the Dodgers have a chance. Yeah.
Yeah. My opinion is Kershaw has to become Madison Bumgarner. That's the only way. He basically has to pitch 3 games and maybe an inning or 2 in other games, and that's the only way it's going to happen, because the Sox talk to the manager of the Astros or the Yankees. The Sox offense is relentless.
Yeah.
And the pitching is good enough. And I say Sox in 5, but I will grant if Kershaw is on and Kershaw keeps pitching and it's at the end of the year, he's got nothing to rest for and he's got that kind of arm. If the Dodgers win, it would be in 7, and it would be Clayton Kershaw just absolutely being a lockdown goaltender and not allowing anything through.
Gotta keep his
career like Bumgarner did.
Yeah.
Bumgarner was a monster in that Kansas City series. He basically won it by himself. When he wasn't on the mound, Kansas City was the better team.
Yeah, and has never been Madison Bumgarner again.
Yeah, well, I think it has something to do with like some kind of motorcycle accident, but or him trying to do home run derby, whatever. Ryan, Brett, it was awesome.
Cool.
Yeah,
thanks for coming back.
Thanks, guys.
Thanks for having me on.
Be appreciate good. That. I can see it is actually recording, so we're going to be able to get a video for take 2.
No cold sweat right now. Noticing that at the tail end.
Okay, guys.
All right.
To everyone.
Thanks,
see you
guys.
next time.
Be good.
Go Sox.
Take it easy.